So it is September 18th, 4 minutes prior to FOMC release. This is what's very critical to recognize. Our guiding light, 1 hour chart, S&P 500 future, had reached danger zone levels. At this particular moment, I'm seeing multiple conflicting reports across the board. We're seeing already long setups on a couple of time frames. But not every time frame is agreeing, and that's a bit of a concern of mine. We're also seeing that our favorite news release source, Trades and News, that is instant news release source for traders, is showing very clearly that it is not unreasonable to see Fed announcing that the tapering will start on 10 to 15 billion reduction prior to Bernanke departure. This is first time ever he will start doing that, next to the announcement that Yellen is the leading candidate to replace Bernanke as the Fed chairman. So there we go. Bernanke is tapering. The is on the way out. This is relatively small amount of tapering is expected to get the ball rolling. Fed indicating that this will likely end by mid-2014 based on its central economic forecast. So once again, if you do not know, FOMC is one of the most critical, most important economic financial news releases. Very volatile. This is the first time we are officially trading and recording it in our trading room. So let's keep an eye on this very jittery dance, incredibly jittery structure. We are monitoring the direct news source. That's what matters to me. The FOMC rate decision is what matters. This is the most volatile and the most critical news release. FOMC rate decision at 2 p.m. EST, along with Fed economic forecast. Press conference at 2:30, so everything will be announced at 2 p.m. EST. Everything else, such as press conference, is very much secondary. So let's monitor what the price will do. As we know, when price reaches danger zone on our guiding light, 1 hour, it will give us nothing more than two things: either opposite trend correction or major trend reversal. And we're seeing that this dance is in the play, and we're seeing an incredible struggle. Fun had just begun. 2 p.m. EST, reminding you the danger of trading. You don't see this very often on S&P 500. That was a lot of fun. So therefore, Fed finds the target threat at a quarter as expected. So what have you witnessed? You witnessed that S&P 500 future just rallied insanely from the danger zone levels, reminding you that S&P 500 future is a beast and the danger of being in a trade during this time. As we discussed in Alpha Wave Traders Club, we had incredibly powerful bullish trade setups at small time frames because the formation was incredibly volatile and the danger of trading these incredibly volatile markets. I have not entered the trade yet. Currently, I'm monitoring incredibly carefully. The rally on S&P just gave us 15 points in barely less than 30 seconds. Reminding you the danger of trading FOMC, reminding you how powerful this news is. Currently, I'm patiently waiting for the pullback before I will touch a trade. Very critical if you're a disciplined and prudent trader to wait, not to enter in the middle of the formation. All the smallest time frames had already given me incredibly powerful structure. At this point, I have no trade yet. I'm simply very cautiously monitoring for formations. So you're witnessing this incredible volatility, and you're also witnessing the danger of entering in the middle of the trend, reminding you no trend goes on forever. So I'm simply monitoring the formation very, very carefully, along with very, very clear reminder. Two things happens when price reaches danger zone, either correction or reversal. This reversal was monumental and spectacular. This is one of the most volatile FOMC we had seen in forever. I don't remember S&P flying 20 points in a matter of seconds. As much fun as was FOMC trading last time, it was incredibly predictable, it was incredibly fun. This is incredibly volatile and very, very drastically sharp move. So patience at this point is the key. We'll blast through this level, our first target. This is very, very critical. Adjusting my trail to 1708. This is our second effort. The first effort was stopped out by one tick. This is a reminder how much you have to respect this level. We had a bit of a glitch on Ninja because of volatility. Quite fascinating. I'm trying to see where my charts are. My other charts, trailing very, very carefully, 1709. Price will blast through this area. The rally will be quite fun. This is spectacular, no tapering, no kidding. Moving my stop to break even, please scale out accordingly. I will assess longer term charts. I will let you know what I think. Trailing carefully, 1711. Adjusting my trail to 1712, showtime. Do you remember what happens when price reaches danger zone? This was ADV trade. That's why I entered a bit too close to FOMC because I knew that the rally will continue. Volatility on my side. I am protecting my profits. Don't ignore that. Danger zone is here. So what are you witnessing? You're witnessing pullback from the danger zone, correct? That's what happens when my trade enters this level. This is not to be ignored. 5 points, not taken for granted. Trailing very, very carefully. I will reassess much larger time frames as soon as we're out of this trade. I may actually be taking a ride to the downside. I'm monitoring the formations very, very carefully. This is the smallest range chart we will ever trade. 5 range. I am out of 5 range. Collapse from the danger zone just started as expected. 5 point FOMC not to be taken for granted. Nobody ever expected this kind of monumental volatility. Absolutely historical event. Everybody expected tapering, no tapering, this kind of rally, and this is a reminder of knowing where these levels are. So let's monitor the structure. Let's see if we're going to get meaningful pullback. Entering here long is not a good idea. I would feel so much safer if I would get a meaningful pullback, because when the sellers will show up, they will show up with vengeance. You're witnessing how predictable this is and the importance of knowing when to stay out. So don't be surprised if I will enter short, but once again, trading 101. If I will take a short under these conditions, I am entering pretty aggressive trade. If you're a prudent trader, you know to wait for a pullback and then monitor for long re-entry. But when sellers will show up right now, the selling will be quite vicious, and I may catch a trade to the downside, just to show the power of alpha wave trader method. But again, as you learn in Alpha Wave Trader course, clearly this is major powerful wave, bullish wave. Stay bullish, would you? Don't exercise greed. Remember, everything I do for demonstration purposes only. And once you learn the method, stay conservative. Give yourself a favor. If you already pulled 5 points out of FOMC trade, adios. Please leave. Don't get tempted. It's not gonna get very fun for a while right now. Monitoring the formations carefully. So this is picture perfect reminder. Entering in the middle of the long trend is not a good idea. As I spelled out, at any moment I may be catching short to the downside. This is a reminder, know when to stay out. It was incredibly evident that this spectacular, magnificent structure is way overextended. I may be taking short, but again, if I take short, it is very aggressive because we clearly have major trend as a bullish trend. We have magnificent first bullish wave formation. But don't be fooled. As a day traders, we're riding waves back and forth, maybe taking short at any. Reminder, not all is pink and peachy in the land of Americas. Please do remember that whatever unemployment data we are still getting, it's from those people who stopped looking for the jobs. So there are so many of those who are no longer part of the data because they had been unemployed way too long. So this is it, guys. We're not getting meaningful pullback. We're in the major chop area. Was one of the most volatile FOMCs ever. This pullback is completely expected. Always a reminder, never ever enter in the middle of the trend. And a reminder that FOMC is one of the most volatile and the most critical economic news releases ever. And if you know where danger zone levels are, this is exactly what we wanted to see. But because the formation that was so insanely volatile, we simply had to wait patiently. The first initial effort did not pay off. Second one did. 5 points not to be taken for granted. So have a fantastic day, everybody. I look forward to seeing you tomorrow.